Hello, everyone. Welcome to this VC Lab event. It's great to see you all. First of all, I'm going to apologize that we had to push the start time of this event back, but we're here now. And usually this event tends to end early. The main reason being a lot of people don't ask questions. So I'm going to start out by asking everyone to please make sure you're asking questions during the session. It's an AMA. Obviously, I'm going to give you some application tips, but it's really the opportunity to kind of, hear it from us, kind of what we're looking for. You can get live feedback on elements of your application. So we do encourage you to please, engage. Speaking of engagement, for those of you who haven't been to one of our events before, you have the Zoom kind of functions at the bottom, and you have the chat. The chat is where you can connect with other people, you can share your LinkedIn and just say hi to the community. The Q&A is where you put things you want us to see and us to kind of float up to the event. So I see people are raising their hands. We're not going to be using that functionality. So it'll be either chat to connect with peers or Q&A to ask us questions. With that, my name is Mirto Lalakos. I'm a principal at VC Lab. For those of you who don't know VC Lab, we run the world's largest accelerator for VC funds globally. Our mission is to democratize access to venture capital. We think that venture capital has the potential to solve some of the world's most pressing problems if you work with the most capable people who have the right values. And so in everything that we do at VC Lab and parent company Desal Group, we always try to work with the best. There's a very kind of high bar in terms of talent and background and just work ethic from people who work at the company to the people we work on the programs, as well as an ethical, kind of threshold almost, right? For those of you who have applied to our programs before, you will know that in order to join any of our free programs, the only thing that we ask in exchange is for you guys to sign them, to pledge to the Mensarius Oath, which is an ethical code of conduct for, how you work in the space of finance. So we're at a stage right now where we're accelerating about 60% of all the new funds that start globally. So the reach is immense. The community is, out of this world. And, there's just so much that you're going to get from kind of coming onto one of our programs. But as I said before, we always look for a really high bar. So today we thought we were going to do this session to just kind of walk you through some application tips and help you strengthen your application for when you're, kind of ready to join. Maybe you've applied already. And hopefully, at the end of this session, you'll have kind of some clear tips on how you can improve your application and maximize your chances of getting into VC Lab. I have a presentation that I'm going to share with you, so hopefully everyone can see this. So there are a few elements that we look at when we score applications, and I'm going to go through these with you guys today. Basically, you would have seen that the application has several fields, but I'm going to tell you kind of the main ones that you're going to be scored on and why. So the first one is your network. We're going to talk about that in depth. Your background, your thesis, and your need. Video is something optional. It's good to have a video because it's good to kind of better understand who you are as a person. And usually the video, you may have some gaps in the application, or we may have some questions when we read your application that usually sometimes the video clears up. So let's go through these one by one, everyone. Number one is network. When you're starting a VC firm, the first thing that you need to do is draft a thesis, which is kind of a statement that tells limited partners, who are the people who are going to invest in your fund, what you're going to be investing in and why you're the best person to do this. So you start out with a thesis, and you very, very quickly start to test that thesis in the market. Okay, so you're going to go out. So it's kind of like your value proposition if you've ever been a startup founder. So you kind of put a value proposition together, and then before you start building your website or building your product, you actually go out to some people and you're like, hey, this is what I want to build. And you start getting the reactions of those people. It's exactly the same thing when you're launching a VC fund. The value proposition is the thesis, and it's a statement that, we're going to actually talk a lot about the thesis later, but it's going to go something along the lines of, whatever. Myrto Capital is a $5 million fund based in Palo Alto, California, looking to invest in climate tech US companies, leveraging, the GP's track record of kind of investing in 10 such deals in the past and achieving 2x DPI, for example, right? And so you will need to, go out to a lot of people who could be potential LPs who are in your first and second degree network and tell them about that thesis. And what you're going to find if you have a strong thesis is that a lot of the people who you speak to are going to get excited about what you're doing, and they're going to want to be a part of what you're building. Now, for that to happen at scale, because it's good to have, a couple of people interested, what's going to happen is that, first of all, you're going to get a lot of feedback from the market, and you're going to start seeing that as you improve your thesis, more and more people convert. And when we say convert, it means that they hear what you're doing and they suddenly become interested in investing in the fund, and so they will commit to the fund, right? But in order to fill up the fund, you need to have a very wide network of these types of people who can help you, who can, fill the fund. So what we're looking for is people with a very strong network. And the easiest way to do this at the moment, and obviously it's not perfect, but what we're going to do is that we're going to look at your LinkedIn profile and see how many connections you have. And this is, a proxy to how big your professional network is. And we're going to score it. So we score everything on a 1 to 5 with no 3s. And so if you have the way to get a 5, so to mark the maximum points on this question in your application is if you have over 5,000 followers. It's not, or connections. It's not a very large number. It's not difficult to achieve, but you need to be well connected to have this number of connections on LinkedIn. So that's one thing we're going to be looking at. Next up, we're going to be looking at your background. And here we're looking for several things. Okay, so in order for you to succeed as a new fund manager, we want you need to have some sort of edge, some sort of unique background or achievement that you have under your belt that will make you kind of particularly well positioned to invest in the space that you want to build the fund around. Okay, so if we're going back to climate tech, so if I coming in and I'm, applying to VC Lab saying I want to invest in US climate tech companies, and then I open up your background and it's all, just fine, generalist finance, or you're a lawyer, or or you just kind of have a background that doesn't really match the thesis, then it becomes a little bit difficult for me to say you have a strong background to support this thesis, right? So the first thing we're looking for is alignment to your thesis. So you're going to score more points if you have a long tenure in that kind of space that you're looking to build the fund around. Also, something that could help here is if we're seeing that you have an active kind of investment background, so you've made investments in the past, you're maybe sitting on some boards, and we can see that you're really well plugged into the tech ecosystem and that you've already started making some investments. So definitely make sure that, you kind of highlight these things in your application, because if we can see alignment, we can see kind of investments, then that's a plus. And when I say alignment, guys, it's really, we want to see that you've been in that space that you're looking to invest in for a long time. Okay, so that is background. Next up, the thesis. So let me see if I have. Okay, so the thesis is this one sentence statement, and I'm gonna get you a link to this statement. 1 second. So going back to the thesis, it's this one sentence statement that tells limited partners what you're going to be investing in and why you're unfairly positioned to invest in that space. So let me drag this here. Can you guys see this? Yes, no? Can someone write in the chat if you can see the thesis template? Alrighty, perfect. So this is the template, everyone. I'm gonna grab this link and put it in the chat as well. There you go. So in every application, we want to see you fill out this template. Fund name, easy peasy. If you don't have a fund name, then just invent something or put it blank. Is launching a, here you want to put a fund size. Guys, don't, okay, we've written about this at length in, both on LinkedIn. If you go to our website, there's a bunch of research about this. Firms that start with smaller fund sizes and funds 1 to 3, on the long run, if we look kind of down 5 years, 10 years time, tend to have much higher AUM than firms that started with a very large fund 1. Now, we could do a whole session about why this is the case, but launching a fund is a little bit like launching a startup. If you go too big, too fast, on the long run, it's going to slow you down. The strategy that you want to follow is start small, put a fund size number down that you can manage and that is realistic given your network. You want to raise that as fast as possible. So that would be kind of somewhere between $5 million to $15 million funds for fund 1. So do something kind of in that range. Make sure that you can achieve this fund size target, right? Because you're going to be out and fundraising and talking to limited partners. You need to get them to convert, right? And you need a very large network in order to fill whatever fund size it is that you choose. You close the fund, you start making as many investments as you can quickly. And the goal of fund 1 is for you to get markups on your investments and then be able to go back out to market and start raising fund 2, which is going to be a slightly larger fund. But again, you want it to be small enough that you can raise it relatively quickly, start investing out of that fund, start getting markups, and then go back out to market for fund 3. And that's how you scale a venture firm from scratch, right? What the opposite looks like is you going to market, let's say, and we see this a lot, and you go fund 1 is going to be $50 million, $100 million. We've seen up to $500 million for fund 1. Guys, in order to raise such large fund sizes, you need very large investors to come into the fund. These very large investors are usually institutional funds, endowments, and so on and so forth. and they are prevented by charter to invest in fund ones. They see you as a new manager, and there's a special new manager bucket that they have, which is defined as a fund one of a new firm entity. So this is important because what it means is that if you've run a fund under a different firm entity in the past, and now you're launching a new firm, right? So new firm entity, and you're doing a fund one, it doesn't matter that you did this other fund, it's not going to count. For this firm, you're a new manager, right? And so it basically disqualifies you from straight out the gate from being able to raise from 80% of these larger institutional investors. So it's going to be really hard for you to nearly impossible for you to raise a 50 million or 100 million plus fund one. So you know, the worst thing that can happen too, so if you go out to market and you have a large fund size that is unrealistic, is that you're going to go to your entire network and you're going to say, okay, I'm doing this $50 million fund. Some of your network may, you know, you may be able to convert them to commit to coming into the fund. And what's going to happen is that you're going to find and see, you know, how difficult it is to raise this fund size and kind of start understanding in practice that these larger investors do not invest in fund ones. And then you're going to have to go back to those LPs who committed to your fund and tell them that, hey, you know what, we were not able to reach the 50 million fund size target. And what happens then? It's basically the death of your firm, right? Because you lose credibility with your existing LP base, who you count on to come into fund two. You know, when you go back out to fund two, let's say because you undersubscribed, then these larger institutional investors will see that you undersubscribed, and straight away you're flagged as, you know, fundraising risk. It's just this, it's a really kind of bad situation to be in, to undersubscribe the fund. What you want to do is set a bar that's lower and exceed that, you know, try to meet that. And if you can, you exceed that. And in that case, you're the hero. You're not the loser who wasn't able to kind of execute on their plan, right? So anyway, very long kind of parenthesis here to talk about fund size. So make sure you put something reasonable here. If we see kind of 100 million, we're going to be like, okay, this person is completely delusional and they're going to fail and they're going to undersubscribe and they're not going to be able to launch a fund two and beyond. So something manageable in the fund size. Stage here, you want to put pre-seed, seed, series A maybe, but most likely if you're a new fund, you would start in this kind of earlier bucket. Venture fund, in here, we want the country and the city. LPs want to know where you're based. We want to know where you're based. To back, here is your geographical scope. Put something that's realistic. Don't put global, right, or anything like that. It's just strategically doesn't really make sense for you or for your LPs for you to be investing globally. It creates massive complexities for you. And also it just has these tax implications for limited partners that they don't want. They don't want to have to deal with taxes in 15 different countries because they invested in your fund, right? So put something manageable like US or Europe, maybe. Sector, this would be something like clean tech, market companies, right? So clean tech startups with secret sauce. And here, your secret sauce is where you want to kind of tell us why you're uniquely qualified to win in this space that you've just outlined in the first part of your thesis, right? So is it that you've made successful investments there in the past? Is it that you have a very kind of unique and a community where a lot of high potential founders in this space are coming out of? Is it because you've been helping a lot of startups by mentoring them or sitting on their board or helping them to fundraise for their next round, right? So tell us here in your secret sauce. This is the best. If you do this, guys, you get you get top points. This is probably the one part of the application we give the lowest points usually. But what you can do to get top points is, I'm going to give you a hack here, is if you can align your secret sauce with this first part of the thesis. So if you're telling me you want to do pre-seed climate tech startups in the US, show me that you have secret sauce that aligns directly with pre-seed climate tech US companies. Okay. And then you get 5 out of 5, especially if you've achieved a lot in that space, right? Amazing. So if you have any questions about the thesis or anything else, as usual, just put them in the chat, everyone. Cool. And then your need. So there's another kind of place in the application where we ask you to tell us why you want to get on the program. So we're just trying to kind of understand whether the things that you're looking to get is something that the program will be offering. One thing that we see a lot here, everyone, is that people are saying, I want to come on the program to find limited partners. Okay. I'm going to repeat this because I know a lot of you will have this in the application. You might say, I want to get on the program to find limited partners. VC Lab and or anyone, no one can find you limited partners at this stage of your firm. The reason being, venture capital is already one of the riskiest asset classes. So for limited partners or high net worth individuals or institutionals, right? Venture capital is high risk asset class. And then you're coming in as a new manager who's never done this before, has no track record. And you're telling them that you want to start a fund from scratch. Now, for the limited partner, this is double risk, right? And put yourself in their shoes, right? Would you give money to a total stranger that came to you and said they're starting a fund? Even if their pitch was very strong, even if their thesis was very strong, if they kind of come out of the blue and you don't have that prior relation, you don't know what this person is about, would you trust them to manage your capital, your hard-earned wealth? No, right? So the only viable way and kind of fastest way to launch a fund one is to go directly to your immediate network, people who know you, who know your past work, who know your passions and your values, and they want to be part of the next thing that you're going to be doing because they know how awesome you are. So it's and no one can do that for you, right? We can't pitch you on someone's behalf, right? The limited partners, they'll just invest in a different fund that has a track record, right? So if they're interested in VC and they get a stranger who's never done this before, or a stranger that has 10, 20 years in the market, has kind of proven performance metrics and DPI and has successfully kind of delivered returns for limited partners in that same firm in the past, they'll just go with stranger B, right? So we don't want to see people saying, you know, I want limited partners. What the VC Lab program can offer you is help you refining your thesis, helping you refine your material, making sure that you don't get in make very kind of costly mistakes, both in terms of time and money, which is unfortunately something that we see a lot. We're going to help you become compliant and be kind of institutional grade from day one. So we want to make sure that, you know, you have a really strong back office, that your governance is strong. We're going to help you convert the limited partners in your network to come into your fund and give you the highest chances of success there and help you convert more and more. You're going to meet an amazing community of other VCs who are doing the same thing, right? So these are the types of things that we can offer you, and we're doing more and more for VCs. By the way, we have created software that's going to help you launch your firm that you're going to have access to for free. So anyway, need could be various things, and it's very likely that we'll be able to make that happen for you, except for introducing you to limited partners. All right. And then we have the video. The video is I recommend you do it. It can help your application. But yeah, it's just kind of, we want to kind of see you, right? And see what you're about and hear more about your fun from the horse's mouth. Next up, so once you submit your application, everyone, we usually get back to you within 72 hours of applying. Sometimes it's even faster than that. And in most cases, what's going to happen is that we'll invite you to an interview. These are 15-minute slots with my colleague John, who is amazing. He's also going to be able to kind of give you a little bit of initial advice and stuff like that. So it's more kind of a chat to get to know you, understand better what your firm is about, what your background is about, etc. And yeah, and then once you do the interview and you get an acceptance letter, the last thing that we ask you to do is to pledge to the Mensarius Oath. This is a non-negotiable on our behalf. The program is completely free, no fee whatsoever. There's kind of some things, so once you kind of start getting a little bit of traction in the market, you could choose to work with us on several aspects of your fund, but that's not necessary whatsoever. But the only thing that we ask in return is that you pledge to the Mensarius Oath. We're trying to build a community that's values aligned. The reason why we're doing all of these things is to solve the issues, both environmental and social, that are happening around the world. And so we just want to make sure that we're working with people who are aligned and who also want to do that. We're not saying, you need to do an impact fund, but we're saying, whatever type of VC fund you build, we want to make sure that you're going to be very thoughtful about where you allocate your money, because where you allocate your money is where the future is going to happen. Okay. And we want to make sure that you're going to be investing capital in things that matter and things that are going to make the world better, not worse, right? So there you go, everyone. So just as a reminder, the final deadline for VC Lab Cohort 19, which is the cohort we have applications open for, is September 8th. However, the earlier you can apply, the better. Spaces do tend to fill up. And if you apply early, we can reserve your spot. Also, we want to make sure that we can have a little bit of time before the start of the program to do an interview. You may want to know more about kind of what it's like on the program, and so on and so forth. So make sure you get your applications in early, everyone. At this point, I'm going to stop presenting here, and I'm going to open the Q&A and go through your guys' questions. All right. So everyone, by the way, if you want to ask a question, put it in the Q&A, but also please go through the questions and upvote the ones that you'd like to see answered. That's going to help us understand kind of which questions are more relevant for you guys here today. Alrighty, so Jordan is asking, if selected, when would the program start? What is the duration and time requirement? Okay, so the program would start September 23rd, Jordan, and the program runs for 14 weeks approximately. So it's 14 program weeks. We have some break weeks, so in calendar weeks, it's maybe like 16 program weeks or something like that. And the time requirement is, look, the program has 2 live sessions per week. a third live session. So that's 2 hours. So it's an AMA and a webinar every week. There's a working group session where you can choose to meet with your working group. A lot of the participants find this extremely useful, and that's how you build a lot of the relationships in the program. But you don't have to go, right? So there's 2 hours of sessions that we recommend you attend live. If you can't attend, that's fine. The sessions are recorded. But I will say this though, everyone, if you the program doubles as your fund building, right? So everything that we're going to be telling you to do in the program is going to be all the steps you need to take to build your fund. So when people ask us about the time requirement, our question to you back is, how much time do you have to build your fund? And in order, if you want to build an enduring and scalable VC fund, like the ones that we talked about, where you start small and then you start stacking up the funds and the AUM, you need at the start, especially, and I think it's a line of work that requires a lot of hours, but the most successful managers were dedicating 50 to 60 hours a week to the program / launching the fund, right? Because it's the same thing. So yeah, in terms of program, there isn't that much to it. It's the 2 sessions, but it's really about how much time you have to dedicate to the fund. So the more time, the better. In terms of your application, we will accept people who are able to commit as low as 15 hours, which is fine. There's other kind of fund types that you can set up that can be done with a little bit less work on your behalf. So we'll take people who have 15 hours per week to dedicate to the fund building. But if you can't dedicate that much, then it's probably not a good fit right now. So hopefully that answers your question, Jordan. Thank you. Claren is asking, if I'm selected and I worked across different continents, is there a restriction on geographic location when I needed to set the fund? No, Claren, there's no kind of restriction per se. You're free to do whatever you want, but I will say that this is more a decision that you need to take, because in most cases where the general and managing partners are located is where they're going to be sourcing the best deals, because they're going to be ingrained in those ecosystems, and that's where you have a lot of kind of stuff in venture capital and startups and innovation just happen locally, right? Obviously there's exceptions to that, but yeah, I think it's a strategic decision and a business decision that you need to take of where the fund is going to be operating in. Having said that, if you are kind of asking about domiciles and where the fund is going to be formed from a legal perspective and domiciled from a legal perspective, about half of the world's new funds are domiciling in Delaware, because you can do that for very cheap. And Delaware is kind of really well set up to to kind of host funds. There's really good infrastructure for it. So you could be domiciled in Delaware and be operating pretty much anywhere in the world. Israel is asking, I'm working on my thesis and want to know if VC Lab cohorts only for specific industries. No, Israel, VC Lab is for all industries. We've seen it all, from kind of generalist, sector agnostic funds, all the way to, sector and fund focus that are extremely targeted, that you've probably never heard of before. I will say this, we do have special tracks for, so we do media tech. We've seen a lot of, we've worked with a lot of media tech companies in the past. We actually have one that's doing extremely well at the moment. So, but I will say this, everyone else, we do have specialized tracks if you're running a venture studio and you're building a fund around it, or if you're running an accelerator and you're building a fund to invest in the accelerator startups, we have special kind of sessions for you guys. You'll be in your own separate kind of track. and getting bespoke advice, because there's kind of some differences and some unique challenges you're going to face as a venture studio fund or an accelerator fund. Steve. All right, Steve. So yeah, you're saying you applied to the program. Let me just make a note of this and let the team know very quickly here. And we'll make sure to get back to you. So there we go. All right, Steve. Lauren, I hear that only about 6% of people finish the program. Can you talk about what those 6% do differently that leads to their successful completion? Yes, of course. So, uh, it's probably, there's probably less chances of you succeeding in launching a VC fund than there is kind of starting a company. Kind of the starting point is a lot harder, and to get to do a successful VC, there's less probability that you'll be successful as a VC than there is being successful as a startup. I'm not saying that it's necessarily harder, or once the fund is set up, things are easier rather than kind of a startup that's scaling, that's way harder. But the chances of succeeding are fewer, especially at the early stages. And the program, every kind of cohort will take in approximately maybe 300 to 350 applicants or so, and only 25, maybe 20 to 25% will succeed in the cohort. So the 6% is not exactly is not exactly right. It's about 25% will succeed. And what these firms do different is that they first of all, they do the work. So they're actually continue to build their fund on a weekly basis. They're committing kind of the hours, and they're making progress, right? They're validating that there is demand in the market for the firm that they're building, and this translates in commitments that they get from LPs who are interested to come into their fund. So if you're able to get commitments from the market and validate that there's demand for the fund that you're building and you're doing the work, that's your kind of secret formula to succeed and to complete the program. And basically what happens is that by the end of the kind of 14 weeks of the program, if you do all of these things, you'll be in a good place to conduct a first close, which is the point of the fund at which you become operational and you're able to start making investments. All right. How many people are accepted to each cohort? So that's about 300, 350. And are they interacting with one another or primarily working on their own? So yeah, there's a lot of kind of social interaction and kind of social sessions during the program. So there's working group sessions we discussed. You can work with each other. We're going to be grouping the entire cohort into these working groups. And yeah, so there's a big community component of it. And there is also an option for you to, if you want kind of one-to-ones, obviously big cohorts, right? But if you want really one-to-one kind of time and weekly one-to-one sessions with the VC Lab team and the experts that we have internally outside of these two AMA, the two weekly sessions, AMA and webinar, then what you can do is sign up to VC Lab Raise, and I'm gonna put the link here in the chat for everyone. VC Lab Raise is kind of the concierge way or VIP way of going through the program, where you kind of are able to meet with the experts one-to-one. You have your own little channel with the entire team on it, who's ready to kind of jump on and help you with any questions you have about the fund, and you get kind of specialized coaching and stuff like that. So that's an option. You can find out more on the link that I put in the chat, Lauren. Lavanya is asking, if you are seeing similar thesis emerge from multiple applicants, do you help them connect, join forces, especially if they have complementary skill sets. No, Lavanya, because the person that you're going to start a VC firm with is it lasts longer than the kind of average marriage. And VC kind of team split ups are super, super messy. So it's actually, there's more chances of the fund failing because the team split up than because something happened to a solo GP. So it's actually safer in most instances to start the fund as a solo GP than it is to pair up with someone random who you're going to fall out with in 2-3 months, if not years, maybe, you know? So we do not encourage anyone to start a fund with anybody that they've not had a long working relationship with. That's kind of, you know, and even maybe a friendship that's lasted over the years and that's, you know, gone through a lot of rocky ground. Limited partners will want to know if you're a team, how you guys met and what kind of relationship you have. And if you're with someone that you just kind of got paired in with through a random program, then they're that you know, you probably won't pass diligence with them, right? So don't, you know, we'd rather you do this alone than do this with the wrong person. I'm based in South Africa. Can I apply? Yes, of course, you can apply from anywhere in the world, everyone. We're here to help you wherever you are in the world. We're here to help ecosystems develop, right? There's about 350 global cities in the world right now, and only 50 have more than 5 or 10 VC funds, which is crazy to think about it. And so there's 300 global cities that don't really have VCs to fund the innovation that's happening locally. So yeah, our whole purpose is to democratize access to venture capital and bring it everywhere. Martha, I'm very interested in building my fund, but worry I'm not ready because I don't have a background in finance or enough experience in VC, but have been a very active angel and LP. Should I apply? Yeah, you've been an angel and an LP. You should definitely apply. 100%. No one has a finance background. In fact, all the finance stuff, you need to understand it, of course, to a certain extent, but your back office people are going to be doing your accounting, right? All the legal stuff you need to understand, but your lawyers are going to be doing the stuff. So you don't need to have a finance background or really have worked as a VC. If you did angel investment, that's great. That really helps actually, but even that doesn't really matter. What matters is that you have a unique advantage in the space in which you want to build the fund around. Can you also apply for a second fundraise? Yeah, Ruben, if you're working on fund 2, we have a special you apply through VC Lab, but we're going to move you into a special emerging manager program that's completely separate from VC Lab and that focuses only on people that are doing a fund 2 or 3 even. Bianca, we're a nonprofit planning to create an LLC for a venture. No. Don't form anything, guys. Anything. You're gonna lose a shit ton of money. You're probably gonna do it wrong and you'll have to start over. So this is, please don't form anything. Do your application, come on the program, and we're gonna walk you through every single step that you need to take. Please do not form or sign any legal agreements before you come on the program. All right. I'm going to take one more question, guys, because we only have 2 more minutes. Narjeet, we started our accelerator for health tech in Jan, and now we want to add a fund to it. What special program is for accelerators? Okay, perfect. Narjeet, we have a special track just for accelerator funds. So how this works is that you're going to be in the normal VC Lab program, but you're going to have additional sessions that are specifically going to help you as an accelerator operator set up a fund to invest in your startups. So you're in the right place. Make sure you apply. All right, everyone. We got through most of the questions. Sorry, Denise, I couldn't get to yours, but hopefully we did a big segment on the thesis. Sorry once again for being late. Thank you for being here. Hopefully this was useful, and I look forward to hopefully working with many of you on Cohort 19. All right, everyone. Until next time. Goodbye.